Experian has seen a large growth in SME lending across the UK. Non-bank lending, alternative finance providers, peer-to-peer lenders across the whole range, providing additional lending into UK SMEs. This is driven in large part by changing regulation and access to new data sources, such as open banking and commercial credit data sharing, a regulation to drive increased lending to SMEs in the UK. Experian can help UK SME lenders through a variety of ways to help drive customer acquisition. This can be in a variety of ways. We can do this by more traditional methods, so contacting SMEs via email, by phone, by direct mail, by understanding what the ideal customer looks like and identifying that cohort of SMEs to target. Those who need access to cash, whether to fund growth or to provide cash flow to that business. We can also look at new innovative digital methods such as digital advertising, targeting SME business owners on Facebook and other social media sources. Once a lender has identified an SME and brought them onto their website to start the customer journey, the onboarding process, Experian can provide further information to help drive a smooth, frictionless digital customer journey, making the whole process as smooth as possible, both for the lender and for the SME who's looking for funding. We can provide a great deal of information on that business and on the directors behind that business. It's often a real good indicator of stress within that business. Is the individual behind that business running their own financial arrangements securely and properly? We can provide various new data points, new data assets, looking at the current account turnover of that business, identifying if they're missing credit commitments, identifying if they're paying bills on time. All these go towards helping make an effective lending decision on that SME. In the area of SME lending, there's two new important pieces of regulation which gives lenders much greater access to really useful, intelligent data that will help make a more effective lending decision on that SME. CCDS, commercial credit data sharing. This provides a really detailed view of a business's debit and credit turnover within any month within their current account. It also looks at and identifies any missed payments that they might have. This is a really good indication of stress within that business. What you can also get is access to open banking information. This provides access to granular transactional level data on that business's incomings and outgoings in their current account. This is driven by consent. You have to capture the consent from the business, from the directors behind that business in order to gain access to that data. But again, it's a really rich source of data to help drive a really better informed lending decision on that SME.